Okay, thank you for joining us today on Business Owner Speak. I am very excited to have with us Vadim Khramov from Edge Capital Investment Management. How are you?
I'm good. How are you, Matt?
I'm doing great, thank you. Thanks for joining us. And like I do with
Sure,
everybody, if you could take a second to tell us a little bit about you and the business.
sure, absolutely. Yeah, more than happy to. We're on a wealth management company. You can call it a hedge fund, right? We're based in Florida. The majority of the team is here. We make money for primarily institutional investors in the United States by managing assets and investing these assets in digital assets. I know it's not a very popular market anymore, but we strongly believe in it. We believe in a regulated, clean, and audited approach to what we do, right? Maybe I can tell you a little bit about my background, right, and how we get over there, right? My background originally, I was born in Russia. Then I moved to Los Angeles, did my Ph.D. at UCLA. Then I worked for the International Monetary Fund in Washington, D.C. So I was on the board of the IMF for about 3 years, very high-level political position. Then decided to switch to the private sector. I joined Bank of America Merrill Lynch in London, had a very fast career, became the head of fixed income and FX trading. Then decided to move back to the US. So we moved to Florida. I worked for a hedge fund called Trend Capital. It's a global micro hedge funds, very institutional size, more than $1 billion in assets. And a few years ago, I decided to launch my own business, right? So that was the time when I said, look, we can implement similar strategies that we can advise our clients and make money for them in digital asset space, right? So the goal has always been building an institutional grade hedge fund that is fully regulated. So we're regulated by the SEC and CFTC in the US. We're regulated in the Caymans for our non-US investors, right, that invest directly in the fund. So as I said, we've been doing it for a few years already, relatively successful. We managed to survive situation with FTX and other things that happened last year, which was, I think, was a complete disaster for the industry. With that said, the way we think about it is, I think once we pass all these cleanups that needed to happen, right? So there is still a lot of value in terms of how the payment systems are working, how you can invest money, how you can sell music, NFTs, and so on. Let me stop over here for a second.
Okay. That's a great background, and I think gives some sense to your experience and why. Well, I guess I'm going to ask why. So you mentioned, being able to develop a lot of the same strategies and whatnot, but was there a particular moment or did something happen that made you say, you know what, it's time for me to go start my own business?
Look, I always wanted to run the business, right? I think people who want to launch their own business must really think that you want to do hundreds of things at the same time, keep it in your head, and at the same time manage people, right? So I always love doing it. I always love multitasking. I always love building and creating new things. So, and that was the reason I said, I want to do it myself, right? Instead of working for everyone. That's number one. Number two, it's about freedom. It's about freedom of choice, freedom of building new things, and freedom of serving our investors and our clients. That I think was the core value proposition for me, right? I said, I really love it. It's clearly, you work much more, spend a lot of time on the business because you have to take a lot of roles at the same time. You have to be fully deeply involved in every single line item of what you do. But I would say it's been extremely busy, but I've been really enjoying it over the past few years, even if we went through probably the worst years in digital asset history ever, right? So I think that's also a great learning experience too. So number three, I think the expertise that I've built by running the business is incredible in the sense that many things that we used to outsource to attorneys, lawyers, clearly we use like tier one lawyers in the US, but usually you want to see these things through the lens like how it can be done better, how we can improve it, how we can streamline the processes, right? How we can hire more people to make sure these things can be done better so we could serve our clients better. So that has been the narrative, and I love it, right? So, and as I said, we're in Florida. We like being here. So actually, some of my guys moved from Los Angeles to Florida. So, which is great, obviously, right? So I think everyone is getting more, connected, moving back from different states, from New York, from upstate, from California down here.
So when you first started the fund, was digital assets at that time going to be your main focus?
Yeah, so we launched originally the digital assets fund, and the strategy is market neutral, so there is no directional exposure. So we effectively said we can do the same what we do in TradFi, right? Again, and it's not investment advice for legal reasons, obviously, right? But we run a strategy where the goal is to make money without detecting directional exposure. It's a mix of arbitrage, algo trading, and so-called yield farming in blockchain. So we did something similar I did in the past in my previous careers, but that was just a great opportunity. I said, this is a very sophisticated technology. Currently the main fund has been running pretty well, as I said, relatively successful. We're looking to launch a couple more funds in parallel, right? Because there are a lot of distressed assets taking place right now in the world. So these are separate vehicles that hopefully will create over the next few months.
Okay. And you've referenced a couple of times somewhat of the call it the beating that digital assets have taken over the past especially 6 months, I guess, but over a longer period than that. I guess two-part question, kind of what has preserved your faith in digital assets, and two, kind of how have you adjusted at least a little bit based on FTX and those kind of things that have happened that everyone seems to be aware of?
Yeah, so look, I spent 15 years at TradFi, right? So I've seen these things with FTX in the past as well, right? So it's nothing new. We have failures in TradFi, corporate frauds that took place in the US, outside of the US. This is clearly hurtful for the industry, but it's important to realize that many things that were implemented in traditional finance assets, they were done specifically for the purpose of preserving value and assets of investors. That hasn't been done in digital assets yet, right? So the way I see it, we're going through the wave of maturing, right? So, for example, what happened with FTX would never have happened in TradFi, right? In TradFi, you cannot take clients' assets from your, let's say, one of the broker's account in the US and send it somewhere else, right? So now we're actually building this thing. So my true belief is that by the time we have institutional custodians that are actively involved in custody investors like Coinbase, Anchorage, and a couple of others in the United States, these are fantastic companies, right? Once you have proper custody that exchanges can use with them, situations like FTX would never happen in the first place, right? That hasn't been done properly, right? That's why it happened. So that's number one. Number two, in terms of our belief in digital assets, we always have been very skeptical about a number of projects in crypto, right? No question about it. That's why we never invested in Luna, for example, right? Luna was a big blow up, right? Many people were extremely positive on certain things we never believed in because we used very traditional approach how we value any company, any token, call it this way. It's the same as stocks, right? That's why if we don't see value, we would never invest in this. That's why what we've seen just a bubble, but we've seen it TradFi as well. You have some small companies that do like early stage IPOs and then disappear. It's possible, except in crypto, it was not in a properly regulated fashion. That's why I think where we're right now is the industry is going through a massive change, right? Through a massive change of cleaning up, right? Bad projects are all gone, bad companies are gone. And the companies that are left actually fantastic, right? So in terms of the technology, then we should think about it. Very simple example, right? So for example, take the payment system, right? So as a business owner, I think people realize when, let's say, if I receive my payments from credit cards, for example, right? Someone is paying me with a credit card, pays my invoices with credit cards. Credit card companies charge you from 2 to 3% on average, right? Sometimes even more. So small businesses are getting ripped by purely like 3% payments to once you do a swipe. So it's top line revenue cut. It's a lot, frankly saying. Imagine you sell $10 million. So 3% of this is 300,000, right? Goes just to credit card company. In crypto, cost of transactions, for example, in different chains like Polygon, is about 1 cent. 1 cent. And you can do it anywhere global on the planet, right? And it's instant settlement. I don't have to wait for the credit card for 30 days to do the settlement process. So that's why you have companies like Circle in the United States and San Francisco that have about $30 billion in assets. It's USDC stablecoin as an example, right? That does really fast payments, right? You can process these payments, transfer currencies, transfer money anywhere on the planet, really fast through blockchain, cost 1 cent on different chains, right? So this is an example when I say, well, this is clearly disruption, right? So the payment systems must change, number one. Number two, for example, we can borrow money on chain right now at about 3.5%, right? When I say on chain, it's on blockchain. We can go to lending banks, which are over collateralized, and we can borrow dollars at about 3-4% a year. Clearly, I post collateral against it, so it's not uncollateralized loan, but it's a very cheap loan, right? Generally saying. In reality, if I go to any bank around here, it's going to be at least 10% a year, right? Minimum, right? In this environment, unless it's subsidized. So this is the second example why we think it's better. And number three, I think one of the big concerns of situations in March this year, when SVB Bank went down, Silvergate Bank went down, right? We've never seen it in the US history over the past 80 years, right? So banks started going down, federal government taking over. So what I usually see, again, my experience has been, we used to invest money in about 30 countries in the world. I've seen banking crises left and right taking place. You can take examples of Mexico, Brazil, Argentina, Ukraine, China, Thailand, Ghana, South Africa, all of them all together, right? What usually happens, banks would take deposits and they would lend money out, right? Imagine something goes wrong, right? So bank would put, $100 million in and they would lend out, they would take $1 billion of deposits and lend out 900 million of this. So it's a massive risk structurally. In the US, thanks God, we have a very strong financial system over here. In the rest of the world, it's unclear. That's why when we look at blockchain and crypto, this problem is solved, technically saying. When we use crypto banks, which has a smart contract around it, right? These solutions are fully over collateralized. So we cannot have situations like SVB when the bank lends to someone else, they don't repay and it disappears, right?
Right.
So blockchain banks do not buy treasuries. They do not invest in stocks. They do not do uncollateralized loans. So these solutions that we build in blockchain are actually the future in terms of how we see it, right? In terms of payments, lending, and other things. So that's why we still believe in it. We think this is the future. And I think many of the venture capital funds in the United States are still investing money actively in crypto. Clearly, it's much slower than it used to be, but the cleanup took place. The good guys are still here. Good companies are here. We just need more regulations and everything else.
Yep. All right. So talk a little bit about your client base. Who are you making money for? What's your kind of regular client look like?
Yeah, so the majority of our clients are U.S. funds of funds and institutional players, right? So we don't work with retail. All our investors have to be accredited investors, right? Mostly these are funds of funds, large institutional players we work with. Split U.S., Europe, we have a couple of guys in Asia, but the majority are big funds. Okay,
got it. In terms of, there's a lot of other companies that do similar things as you. What would you say, sets Edge Capital apart a little bit from others?
That's a very good question. I think a simple answer is that when FTX blew up, crypto is down 70-80% last year. Bitcoin was down 70%. We actually made money last year, right? Which was that stands out, number one, right? Number two, we are deep dive paranoid researchers and paranoid risk managers in terms of how we assess any type of investment. So we use so-called tiger style approach in terms of how we analyze where we invest money. It's a lot of time in due diligence, a lot of time of analyzing insurance, analyze a lot of work on legal setups in terms of how we set up eased agreements, brokerage agreements, custody around it, right? So we spend a lot of time on this, which helped us avoid a lot of situations like FTX and so on in the past, right? So that's, I think, our core edge in terms of how we do things, right? And I think the last component is our core goal is always to be fiduciaries for our clients, right? So anything stands up first, right? Making sure we cut the cost, make sure we have the best deals for our investors so we could generate yields for them.
That's great. So looking forward, what does the 3, 5, 10-year plan look like for the business?
Yeah, so I think where we're standing right now, clearly, we're happy that the industry is going through a large cleanup. Right? Overall, the global environment is currently very high U.S. Treasury rates, right? So 5.5% on T-bills effectively creates a lead in terms of our borrowing cost is higher, our cost of leverage is higher, investors like a little bit on hold. So I think for us, We want to make sure that over the next year and a half, we deliver like consistently conservative returns, which is superior versus the risk-free rate, which is extremely high versus where they used to be. Number two, it's grow the asset base and get more clients. And obviously, that's the goal. We want to make sure that the industry is A, get more regulated, B, has more clarity in terms of where crypto is moving, right? And C, that institutional players like my former pension fund clients would come in back into the industry and say, now I understand what's happening. We have clear rules in this industry, right? And that would help us massively grow the business. Look, we've been doing it for a few years already, right? So I think we build up very good foundation to a very good start for the future, right? We just need to pass through this period of very high rates. And we believe that institutional clients will get back.
And so some of that regulation, what are some of the areas that you think most regulation is needed?
Yeah, so a few things. It's very simple, right? So we've been still having conversations about, is crypto security or commodity? This has been ridiculous, to be frank, right? So for a very long time. So we consider everything securities and commodities. We're fully regulated. If it's like we're overly regulated, then we have to be, because we're staying on the cautious side. So this is number one. Number two, we need more clarity on custody side, right? On digital assets. We want to make sure that the big names like Coinbase have a clear plan that we can do this, we cannot do this, right? Because so far, because of regulatory uncertainty, we don't even know how to hold digital assets properly, right? So is it qualified custody, not qualified custody of assets, and so on? There is no clarity on this, unfortunately. And so far, we feel like there has been pressure on our industry because of the FTX cases, right, that took place. Mm-hmm. So once this is cleared out, so we hope that we'll have more clarity from the SEC and CFTC, and we'll have a couple of laws in the US that are passed that will tell us these are the rules, that's how we want to make it work. That's going to be clear. Number two, this is AML KYC issues in digital assets. So clearly, guys like us, we're fully regulated. We have fund administrators doing the AML KYC and everything possible, right, on our clients and everything we do on the investment side. But at the same time, you have ATM machines with Bitcoin that pretty much do cash transactions like in a casino in Las Vegas, right? Stuff like this must be cleared out, right? I think we need regulations for this, right? Number three, we need more clear law enforcement situations, right? I know the DOJ and the FBI are doing fantastic jobs on recovering digital assets. We worked with a couple of them, and I think they have a very strong team, but they do need more resources, because people are moving more to digital assets, more payments will be processed in digital assets. You want to make sure that all these hacks, all these fraud attacks that took place in the past couple of years, we reduce number of them, right? And we want to make sure that the law enforcement understands actually how all these transactions are working. So once these things are cleared out, I think we'll have a solid foundation to build another, effectively, a 13th asset class, right? In addition to 12 asset classes, this is asset classes in S&P that effectively a digital asset class.
Okay. All right. So as a business owner, I'm curious if you had a few words of advice or wisdom for someone who's either just started their new business or they're working, they've got a plan, they're thinking about taking the leap. What's some advice you'd give them?
Well, number one, keep your ears open, talk to a lot of advisors and partners, right? Make sure you learn fast, stay humble, understand how everything works by yourself first, create proper business processes within your firm so it's aligned and efficient. Number three, make sure you have enough cushion financially so you can build a business. So nothing happens overnight, everything takes time, especially in the current environment. It's extremely hard to fundraise money for the new companies, right? And also interest rates are extremely high, right? Yeah. So number four, keep your original initial cost low. Don't go crazy, spend a lot of money on expensive offices in the middle of Miami, obviously, right? So that's not necessary. It can be done initially at a step-by-step process, right? So everyone builds business one by one, right? Once you grow, you can leverage that. Number four, attract capital, attract human capital, like people who work for you, hire the best people, spend a lot of time interviewing the right guys, make sure they're the right fit, create the right incentive structure for them to stay and build a business.
Yeah. I'd say that's really great advice. Just follow Vadim's plans and it'll be perfect. No problem.
Well, look, the last component is implementation is key, obviously,
Yeah.
right? So I think what we've seen that many people start implementing the plan, and implementation, like you have different views how it should be. Something else go wrong, right?
Yeah.
There is a lot of stuff that goes wrong, takes more time, basically 3 times more time than you expect, 3 times more headache than you expect, right? At the end of the day, you still want to have it done. So it's consistency, implementation time, and also you really have to be a very strong believer in what you do. Otherwise, you don't have enough energy to pass it, right?
Right.
So this is the only way to build a business, right? And the last component, I mean, usually I tell people, make sure you have the right CPAs who work for you, like on the accounting side, because it's very critical. Number two, make sure you have the right lawyers who do all the regulatory filings, especially when in a fully regulated business, right? So we want to make sure everything is done. Make sure nothing is delayed. Make sure you build an institutional quality business from start, such that you see, like, all right, where you want to be in 5 years down the road. You want to be a small company with 5 people, or you want to run a $1 billion business, right? And in order to build a $1 billion business, you really must behave as a $1 billion business in the sense that you must have everything in place, all your legal docs, all the formation docs, all the regulatory filings, and everything else. If this is done, this is a strong foundation for the future, right? Because otherwise you are competing with very big names in the US especially, right? There is a pretty much unlimited amount of capital in this country that you are competing against, right? All the big names, they have 1,000 times more money than you do when they start. That's why you must have your edge to beat them. Otherwise, they can just overspend and take advantage of it.
Right. Very true. And what I like the best is if you don't believe in what you're doing, when all those changes come and the challenges and the hurdles, you don't have the passion to work through that. So you got to have that. So Vadim Khramov with Edge Capital, I really appreciate your time. Very insightful and gives us hope that digital assets are still a safe and lucrative place to look at putting your money. Not that that's advice, right? We get that.
Of course. Yeah. Anyways, thank you so much, Matt, for inviting me. Very much appreciated.
My pleasure. All the best.